Hi, everybody. This is January 20th, Monday, and your market update. It's been an interesting year, the last 12 months, and I want to give you a quick recap before talking about the current market. In the last 12 months, we've seen a complete change in interest rate policy from rising interest rates about this time 12 months ago to a complete reversal by both Fed and the Bank of Canada, with the rates continuing to drop. We also saw a really heating up trade war between the United States and China, which got underway last year in a big way, and really hasn't been resolved in a big way yet. What we are seeing is a very bit of a dichotomy in the market right now. We're seeing interest rates going down. We're seeing 4 quarters now of earnings growth starting to slow. And we're also seeing manufacturing numbers starting to slow as well. So why is the stock market going up? It's going up either, normally the stock market is forward looking in terms of the real economy, or it might be being buoyed by lower interest rates. I personally think that at this juncture, the market is moving up, being buoyed by lower interest rates. And that's really a result of where can money go? It's a negative rate of return with interest rates right now. So the stock market still looks very attractive from that perspective. Is the stock market overvalued right now? Well, it's not cheap as a whole, but there are certain parts of the market that are kind of interesting right now, and we're trying to take advantage of them. One space that we like at the moment is the energy group, which is cheap relative to the market. And that's because it's been out of favor for several years. One space in there we like particularly is the natural gas space, because I think politically it has a better flavor than oil. And I saw in the paper last week John Horgan saying that he wants to build a gas pipeline across BC, and he's committed to it, which was very interesting to hear, given the energy space and the political side to it in the last few years. So there's opportunity there. We've been adding names in that space. I particularly like the infrastructure names and continue to do so. That said, we have a lot of assignments coming due over the next little bit here in January, and we'll be contacting clients about that over the next couple of weeks. Where do we go? Well, I like dividends, and I like defensive dividend names, and I also like the ability to sell calls a little closer to the money. What that means is that normally when we're buying stock and selling calls for enhanced income through selling calls, we're often doing it out at the target for the stock. So right now, I'm liking looking at bringing those calls a little bit closer to the price we paid for the stock. And by doing so, finding in some instances that we're getting a lot more income up front for doing so. And likewise, we're getting some downside protection in the event that there's any downside volatility in the market, which might be a reasonable thing right here. So when we're looking at the market here, I think it's good to refocus as long-term investors as opposed to listening to the politics of the day. And that's kind of heating up around the world right now. Lots of news, sometimes very concerning news, coming out of different countries around the world, and lots of tweet coming from south of the border. Trying to stay focused on the economic data as it comes. And right now, what I can say is that interest rates remain very low. And as a result, looking at employment numbers, data like that, I think this market could continue to go on for some time. That said, it is subject to all kinds of potential volatility along the way. But as I said, let's stay focused on yield and opportunities as we go. And I think that's really the best way to view this market. If you have any questions, feel free to give me a call, and hope you have a great January. Thanks.